Guys, there you have it. Ship it. They processed in 2021 over $13 million in volume from e-commerce sellers by helping them say, okay, where do you want to send that package of shoes? We'll pick the carrier, we'll send it. Their take rate was 25. Well, back then it was 18%. Today in 2023, because of macroeconomic conditions in Chile, retailers, higher interest rates, less retail sales, et cetera, they'll do about 6 million in GMV. He did the hard work last year of downsizing from 110 employees to 25. They were burning 200K last year. This year on track to profit 500K. They'll to make 1.3 million in terms of take rate on 6 million GMV, hoping to just buy additional time here as they continue to scale. 800 customers today because he lost 200 when he increased prices, but that's extra margin to the bottom line. He's bought himself more sustainability, more longevity. We'll see what happens next. Hey folks, my guest today is Allan. He's a commercial engineer from the University of Chile, experienced in business incubation and a passionate entrepreneur and sports enthusiast. He co-founded ShipIt, a successful business that achieved over 12 million in annual revenue with a team of 110 folks operating in 2 markets, focused on tech logistics for e-commerce. Allan, you ready to take us to the top?
Let's do it. Let's rock.
All right. Give me a customer story here. Name someone that's using you and how they're using you today.
All right. So let's see. Today we have a customer which is called Semoran, which is women's shoes. And they have their store set up in, I think it's WooCommerce or PrestaShop. And they easily integrate with a platform like ourselves, ShipIt, to import their sales and will automatically choose the best carrier company to fulfill their logistics needs. Either is it same day delivery next day or delivery for next week. And after that, we're going to have 2 situations. We are going to either send the carrier company to pick up, or for smaller companies, we ourselves, we have a small operation. We call them heroes, where we pick up. They go to our cross dock. The heroes, yeah. They go to our cross docks, and then the carrier company goes to our cross dock and picks up there.
Interesting. So I guess how much have you hired internally for this versus our external contractors? How many heroes are full time on the team?
At the time being, I'd say like 14. It's like a scalable. We've tried to focus on a very scalable operation. So at the beginning, they were like full-time employees for us, but then we had them change to a like company contractors, right?
Yeah. I guess why did you make that decision? Just you want to decrease your burn?
No, I mean, Chilean laws and actually like South American laws are very like employee focused. So it's actually very, very hard to have them in your payroll. Like it's going to be expensive, and they also prefer to be as contractors. So
yep. Yeah, so this reminds me, and we've had like the Freight Forward CEO on, FreightWave CEO on. They're connecting sort of shippers, e-commerce producers in mass with sort of couriers. You're really doing this at a brand level, more detailed level. Would you agree with that statement or no?
What do you mean at a brand level?
Yeah, so you just gave the customer example was a very specific brand, right? You mentioned, I think, a shoe company, right? And you're helping them, I think, find space on whether it's trucks, ships, planes to ship their e-commerce goods. Is that right or no?
No, actually, we are responsible from the beginning to the end of what happens to that parcel, to that package. So we are going to choose which carrier company is the best according to the customer's specifications. So the customer might set on the platform like, give me my best alternative in the shortest time span, and we're going to choose, and we're going to be responsible. So actually, we're going to collect those 12 million in revenue. We're going to collect the full parcel price, have our profit, and then pay to the carrier company. So we actually have like a 25% gross profit, and actually I called it GMV and then profit because it's a take rate of 25%.
Yeah. So just to break that, that's very helpful. Thank you. Just to be clear, the brand you work with never actually picks their carrier. You just have your own internal network and you're picking where to put that parcel of socks or shoes or whatever.
Exactly. Yeah. And I'm responsible of negotiating contracts with carrier companies. So if they don't deliver in 3 days, they're going to charge me for free. And maybe I have a different SLA with the customer. Like 5th day, it's going to be for free.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time. You can see what it changed over the past 88 days and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview and break down these margins. So you mentioned 12 million GMV in your bio of the, right?
Yeah, I mean, there has been some slight changes because Chile, I don't know if you know, but Chile has had a lot of political and economical conflict. So maybe like a scroll back, 2019, we're selling 2.5 million. 2020, we sold 10 million. 2021, we sold like almost 13 million. And 2022, we sold 13.
Yep.
And then 2022, we sold 6 million.
Yep.
So what the hell happened? Basically, like I said, political and economical. Like the pension funds, the government approved 4 different withdrawals of the pension funds. There was massive inflation. With this inflation came along like interest rates, a surge in interest rates. Retailers saw a decrease in their sales, and my sales depend on the retail sales. So basically, a lot of retailers went out of business. A lot of them decreased their sales by half. Yep. And many of them had to cut costs and like go and negotiate directly to their car company. So this year, to be just completely honest, this year we're going to sell probably the same 6 million we did last year. So.
Well, let's talk more about that in a second, but I want to break down the margin profile here for a second. So you did 6 million in 2022 last year. You're saying of the 6 million, 25% of that is your take rate or your bottom line?
No, take rate.
Take rate.
And,
okay.
Yeah. And let's use this year as an example so we're going to sell probably the same 6 million. We have a take rate of 25%. So that's going to be around 1.3, right?
Yep.
And probably as an EBITDA, like bottom line, like you say, it's going to be like 500,000.
Look, it's impressive that in this market, it's impressive that you're profitable. You're planning to generate profits.
It's a long story, Nathan, because I mean, we were a team of 110. We had operations in Chile and Mexico, but last year we were raising funds. We had a term sheet signed with 2 VCs, and they withdrew the term sheet.
What were the terms? How much were you raising at what valuation?
We were raising 10 million at a 13 pre-money valuation. And out of those 10 million, 5 were for like working capital and 5 were for to purchase a Mexican company. Right?
Oh, wow. So but you were selling 40% of the company basically, right?
I know. And I had a huge problem because my investors were like, our pre-money valuation is too low. And I was like, I've been for the past 6 months trying to raise money. This is the only term sheet we have. Are we going to, is it or not? And it took me like 4 months to like actually convince my investors to take it. And once I get to that point, like the Chilean economy had sunk and VCs withdrew the offer. And but that by that moment we had accumulated a lot of debts. Like I didn't realize. I think I probably made a mistake there. At the time being, I'd say like we have a $2 million debt.
Yeah.
So
from a bank, or what was the debt?
From the same suppliers. Like my carrier companies were my loaners. And
I see.
So I have some suppliers, and although a reasonable debt is going to be like 1 to 2 EBITDA, which is like because I pay in 60 days. So I obviously I have like the opposite of accounts receivable, accounts payable, but it increased like 2.2 to 2.5 times because I extended this with my suppliers. Yeah, it was like, the money's coming.
Yep.
It never came. And I had to decrease the team from 110 to 25 guys. So
tell me how you did that, Allan. That's really, really hard to do, but you did it.
Just imagine August 5th last year, like 15-minute call with 40 guys at the time. Like it was horrible. I probably spent the next 2 months, like August, September, October. It was horrible. Like, and we had to agree to pay their, how do you say when
severance?
You fire someone? When you fire someone, you have to pay them some money.
Yep.
Like we had to agree with them, like, guys, I don't have any money. I need to pay this in the following 6 months. Because at the time being, we're burning like $200K a month. And it was kind of reasonable. The VCs didn't have any problem with that. But
and how much cash was in the bank at that point?
None. We're just playing with money entering, money leaving, and at some point I went to my investors. And actually, this is like kind of a sad story. I went to my investors the day the new VCs withdrew their term sheet. I went to my investors and I was like, "Hey guys, we have a problem. We don't have a term sheet anymore. But I made out a plan. I need 600K to do all the changes I need. I need to close Mexico operation. I need to fire people, pay their money. So I need around 600K." And my investors were like, "Sorry, not gonna happen. You should probably bankrupt the company." I was like, "I'm sorry, what?" I mean, this is a company. We have thousands of customers. We at the time being we had over 1,000 customers, recurrent customers, and I was like, "I'm not gonna bankrupt the company." And actually, I went against all odds by myself, like with no money. I had to like push every debt, every payment. I negotiated with the carrier companies and told them, "Hey guys, so bear with me. We've been working together for the past 7 years. I know I owe you a lot of money, but if I go bankrupt right now, I'm not going to be able to pay any of the debts I owe you. But instead, let me pay you day by day so you don't increase your liabilities. Like every day, I'm going to pay you for the same services I use." And that's the way I've been able to go through. And since the changes, I went from negative 200K to a positive 40K per month. So probably
that's not easy. Thank you for telling us that story. I mean, there's so many CEOs that had to go through that or are going through it right now, but no one talks about it. So they always think they're the only ones doing it. And it's just not true. A lot of founders are doing this right now.
It's horrible. I mean, I've heard so many companies go bankrupt. And I've seen this on other logistics company in Chile, in Mexico. Like now, July, they're telling me, "So Allan, I have a problem similar to yours in like you had in August." And I was like, "Boy, you're 8 months late. You should have seen this come earlier." Yeah. Happy to help, but you're kind of late. I don't know if there's a way back.
Yeah.
But
so let me ask you a question. I mean, your current investors didn't want to support you when you asked for 600K. Do you turn the tables and say, "Well, then let me buy back all of your equity for a super discounted price"?
I did. I offer. I actually had 2 times, but it's unbelievable because the same investor that didn't want me to take the term sheet of the $13 million pre-money valuation, I was like, "Okay, so you don't want to put money. you're okay for the company to go bankrupt. Let me buy the company. I'll take all the liability on my personal name. And they were like, no, and I can't let you do that. And I was like, why not? You're willing to
It's one or the other.
But it's something like some ego. I don't want. I I have no problem for you to fail, but I don't want you to succeed. It's like, what the hell?
Yeah.
And unfortunately, so that was the first time I tried in August last year, and I actually tried again like 2 months ago, probably. But unfortunately, on the shareholders agreement, we have the right of first refusal, right? So
Yep.
I actually made an offer, but I knew that this guy would want to take over the company from me.
Yep.
So I didn't actually. So I spoke to my co-founder and told him, don't just agree to sell the company to me. Obviously, I had spoke to him, and let's wait for the 10 days for the expiration of the other shareholders to actually like put an offer over the table, because I know this guy hasn't read all the bylaws on all the shareholders agreement and stuff. So he's gonna make a mistake. He's gonna make an offer when actually my offer hasn't been approved yet. So actually, the right of first refusal won't be applicable. And that happened. This guy, day 9, he made a $20,000 offer for the company. I was like, I just knew it. I just knew it. And at the time being, I'm stuck with these investors. I I don't have the right incentives. I've gone through a lot by myself, but
Yep.
Water on the bridge. I mean,
How
life
much
goes
do you
on.
and your co-founder own today?
Probably around 49%.
49. Okay. I see.
Hmm.
Interesting. Well, I mean, are you seeing anything at a macroeconomic level in Chile that gives you confidence that maybe 2024 will look better for the company in terms of retail sales, inflation, etc.?
I'd say definitely yes. Because this year and last year there was a lot of uncertainty because the people of Chile vote for a new constitution, and the constitutionalists, the ones who were to write the constitution, were a mess, just a mess. It's just
Yep.
political. It's not very PC. But they were a mess. They were all left wing, extreme left wing, and it gave the economy a lot of uncertainty. Basically, the constitution it wasn't approved, and and the new constitution to be rewritten is like super right wing, and so that's pro economy. So probably next year, although we have a left wing government, the new constitution is going to be like the one we have at the time being, or right wing. It gives so much confidence to the market. So I hoping
It'll be better for business.
it's going to be better for business. So hopefully 2024 is going to be better, not much better than this year, but we're not going to have like the biggest recession we've seen in throughout history, but it's not going to get worse than this, probably.
Yep. Interesting. Well, this is a heck of a story. I mean, how many customers of the 1,000 do you still have today?
Well, when I actually last night I probably saw a video where surging prices is something like yeah, actually it was from live presentation from a VC of your interviews.
Okay.
Where like raising prices is something founders are super scared of. And actually in January this year I was like, okay, so what's killing me is my cash flow. So what if we turn into a completely SaaS business? So I did an interview to all of my customers, and my customer said, no way. I mean, I like what you offer me. I like I like the value proposition. And I was like, okay, so if you like it that much, I'm going to increase my prices. And I did. And actually, my take rate went from probably 18, 19 to a nice, juicy 26%, which is almost a 40% increase. And that's because I surged my prices probably a 10% for my customer, which actually means like more gross profit. It's just neat income with no additional costs. Obviously, I had to do some discounts, but I went down from 1,000 customers to probably 800, and I had a churn of probably like 7% revenue. So overall, it was super positive.
That's great. That's
You
great.
you need to have some guts and just dive
Go
in,
for it.
go
Yeah,
for it. Yeah.
very cool. Very cool. How did you, I know you're a fitness guy. How did you manage just your physical well-being, just your energy levels, your sleep, your food, your gym time while you're going through all this pain?
Sleep and sports. That's like, and one mistake I did, a horrible mistake, was not talking enough to my wife. Probably in August, I came one day and I said like, oh man, like the company might go bankrupt. She was like, what the hell? How how come like you didn't tell me anything of the process, right? And it was like, and you're right. And I had to stick with all this burden myself. So my biggest recommendation is gonna be talk to your spouse, to your wife, to your whoever, to your best partner. Um, don't be afraid of talking these things. Shit happens, and sleep at least 7 hours a day. I try to sleep 8. So I wake up, I start working at 7 a.m. So I try to go to sleep at tops 10:30 in the night. I do gym after work, and I do it with my wife. And we're both very sporty, so we have a very and she's a consultant, so we have a very strict day in regards of work. Then we go do sports together, we eat together, and then maybe we work a little bit more together. And so it's a nice balance. We've been together for 10 years and it works.
That's amazing. That's amazing. Well, okay, take us home here. Last famous 5. Number 1, favorite business book.
Probably my mantra today is monetizing innovation.
Number 2, is there a CEO you're following or studying?
I probably like a lot what you've done. So Nathan Latka might be the name.
You watch a couple of the interviews?
Yeah, probably I'm gonna copy your business like you taught me.
You're actually in a very good position to launch a embedded fintech company based off how you sit in the payment flows. We can chat more about that later. But
okay.
All right. Number 3. What's your favorite online tool for building Ship It?
Online tool for Ship It must be Slack.
Yeah. Well, actually, we know situation. So, married. Do you have any kids?
No kids.
No kids. And how old are you?
33.
23. Wait, 33? 33. Okay.
Yeah.
Got it. Okay, so 33, and then last question. Something you wish you knew back when you were 20, Allan.
I used to work in an incubator from Chile, and there was like this motto, like money over the table, take it. That not always applies. Like choose carefully your investors. I mean, if rather be alone than with bad company. So I'm suffering this right now. So choose wisely, and always hear your spouse, because my spouse told me, she told me, do not take money from this guy. And I was like, you don't know him. He has good intentions. Yeah, right.
Guys, there you have it. Ship It. They processed in 2021 over $13 million in volume from e-commerce sellers by helping them say, okay, where do you want to send that package of shoes? We'll pick the carrier. We'll send it. Their take rate was 25. Well, back then it was 18%. Today in 2023, because of macroeconomic conditions in Chile, retailers, higher interest rates, less retail sales, etc., they'll do about 6 million in GMV. He did the hard work last year of downsizing from 110 employees to 25. They were burning 200K last year. This year on track to profit 500K. They'll to make 1.3 million in terms of take rate on 6 million GMV, hoping to just buy additional time here as they continue to scale. 800 customers today because he lost 200 when he increased prices, but that's extra margin to the bottom line. He's bought himself more sustainability, more longevity. We'll see what happens next. Allan, thanks for taking us to the top.
Nice. Thank you.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company, or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them, and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.